Good morning, good morning. Happy Friday to each and every one of you. How are you doing? It's Sanjay, your local property agent and one of the Avocado property partners. Today, and we're going to be running these consistently throughout the year. We're going to be doing a full monthly update on all things mortgages with my very own personal mortgage advisor. He's done a few mortgages for me, especially tricky ones. Uncle Dave from AFP Wokingham. How are you, sir?
I'm very good, thanks, Sanjay. Not bad at all for a Friday. Thanks for inviting me along today.
No problem at all. Thank you for coming. Right, so today we're going to get straight into it. How has January been for the mortgage market in general?
It's been surprising, actually, Sanjay. I thought this side of the new year would quieten off, but far from it. It's still been very busy. We've seen a bit more activity from first-time buyers. There's some more offerings out there for those now. So it's been good. It's been good. Yeah, it's still been busy.
Now, we were just speaking before we come on. Let's talk about first-time buyers first. First-time buyers, I've personally seen a rise in first-time buyers out viewing with me and looking at properties. Obviously, probably because of the 10% deposit mortgages, which have come back in full force. Let's talk about the 10% deposit mortgages. What the hell has happened over the last month? Because it's gone a bit bonkers, hasn't it?
It has, yeah. We were stuck without any offerings. I say any, very few offerings, and the likes of Nationwide that were out on a limb there had tight restrictions, 25-year term, wouldn't do flats, lots of limitations. But other banks have started coming in, and it seemed like once one or two dipped their toe in, all of the others followed. We've probably now got about 7 or 8 lenders, mainstream lenders, that are going back into the 10% deposit arena, that 90% loan to value, which is what those first-time buyers were waiting for. And even the likes of Nationwide are loosening their restrictions now. They've gone from that 25-year term limit to 35 years now, which is really good. So it's positive news.
Amazing. What sort of rates are we seeing for those 10% deposit mortgages? Are they realistic? Are they good?
They're good, but they're high in comparison to what they were pre-pandemic. But if you think of things over a 5-year picture, they're still actually pretty competitive. At the moment, I can't say what it's going to be tomorrow. Your probably lowest out there is going to be about a 3.24 with a 999 fee, ranging up to maybe, I don't know, maybe 3.8, something like that, if you want a fee-free product. But the fact is, there's something there. And if you go for a 2-year fixed, it might just be a short-lived, high interest rate, couple of years, look at remortgaging and we can get something else for you. So it's definitely an opportunity that wasn't there, a couple of months ago.
Well, I had a recent client, obviously, which you helped them with a mortgage, and they clearly said to me that we only want this 2 years and then we want to get out. But it gave them the opportunity to go and buy their first home just because they had a little one. Their circumstances had changed, so it was a perfect opportunity. So that's why it's really it's given that stimulus, hasn't it, to the market, which is nice to see.
It really has. There must have been so many people sat there throughout the majority of last year that saw all these houses, because I mean, you tell me better than I know, but a lot of the smaller properties, let's say sub 200,000, were probably quite hard to sell because that market couldn't get their deposits together. Now all of a sudden they've got the opportunity, 10%'s back. Yeah, let's hope we see a bit of a surge in those first-time buyers. Now we can help them.
Absolutely. A couple of people commented. Morning, Chris. Say morning, gents. Hi, Andy. Say morning, Uncle Dave. If you've got any questions regarding anything mortgage related, we are live. Pop it in the comments box and we will ask Uncle Dave. Right. Thank you for that on the first time buyers. It's really interesting to see what's going to happen. Do you think these 10% deposits are going to last?
I do. Yeah. The fact that more banks are coming on board, more flexible criteria from the likes of Nationwide now, I don't see it being drawn back in at the moment. I think the confidence is probably back. And yes, I'd like to say they're here to stay.
And I want to go one step further for any first-time buyer that's watching this. Boris Johnson last year announced that he would be introducing a 95% loan to value this year at some point. Whether it's going to happen or not, I don't know. Do you think that's going to happen?
Okay, so obviously, pre-pandemic, 95% was relatively easy to obtain. If we cast our minds back probably 5 or 6 years, there was a thing called It was a Help to Buy guarantee. Now, completely different to everything we know Help to Buy as today. This is basically where the client could put a 5% deposit in and the government would back any shortfall should the lender lose out. So if there was a repossession, lender sold the house, it was worth less than they actually owed on mortgage, so there was a shortfall, the government would back it, so they'd pay the difference. I think there might be something like that reintroduced. Now, I don't know, I haven't heard anything that you haven't, but that's what I think they might sort of try and aim towards. So a government-backed 5% product of some sort.
Yeah, absolutely interesting. Yeah, I mean, obviously we don't know what's going to happen. the way the world is at the moment, we never know what's going to happen next week or predictions wise. So no, it's fine, absolutely. Let's talk about. I've been speaking to a lot of first time sellers about loan to values, and they were saying, obviously they want to maximize how much they can buy up to, but they don't want to stretch themselves too much. So in your experience, obviously with first-time sellers that are looking for a larger loan to value, what are they looking like in terms of like mortgage rates, and how are they finding that at the moment, and what would you advise them to do?
So first of all, we were just talking about those 90% loan to values. Some banks are still limiting that to first-time buyers only. So if you want the biggest loan to value, which is 90% at the moment, as a home mover, a second-time buyer, first-time mover, then you are slightly more limited, and you're still up at those really high interest rates. So the 3.5% maybe, and if you're going from that £200,000-300,000 property up to a £400,000-500,000 property, actually 3.5% does make those payments quite expensive. So realistically, you're probably going to want to try and stay at about 85% loan to value or less. Touch wood, I don't see that being too much of a problem for most people who have actually got equity in their property that's built up, and they should be able to come up with that in most cases. Even then, you could be talking 2.7, 2.8 sort of rates as of today, always changing. So it's not as cheap as it was, but more palatable than if you're trying to really stretch yourself at 90%. So I'd say 85% is pretty common and very doable for a first-time seller.
Yeah. The reason why I asked that is because prices are at an all-time high. They have increased because of the lack of demand, lack of supply, but the rise in demand for properties. That's why we've seen a lot more properties that, probably weren't selling 2-3 months ago that are selling now, because there's just not enough homes on the market. So with a first-time seller that's looking up, they're obviously wanting to maximize how much they can borrow, but reality is that they don't want to stretch themselves because they're going to be paying more over that time, right? So
yeah, absolutely, it's a balance, isn't it, by getting that property and the mortgages that you want, and actually the monthly payments. It's all one thing saying, oh, okay, I'm really going to stretch myself and move into that home, but you don't want to end up resenting it. You don't want to have such high payments that you can't go out and enjoy your life. And you've got to have a balance, haven't you?
100%. Cool. All right. Also want to talk about a couple of lenders. Santander.
Yes.
What's going on with Santander?
So I've always liked Santander. I always thought they're a great lender, but they've been really harsh on the self-employed. I think this month they introduced it. So they have put a blanket ruling out saying if you've got any form of self-employed income that you're going to try and use towards the mortgage, you have to have a 60% loan to value or less, which means you need a 40% deposit. Wow. They've just ruled out, first-time buyers, potentially second-time buyers. It's a very, very harsh restriction they've just brought into play. They've big step for them, and it's probably been around now for about 2 or 3 weeks, maybe 3 or 4. And I was kind of waiting for other lenders to react to see if anybody else followed suit. And so far, touch wood, nothing that drastic has happened. So I'm wondering how long they're going to stay out on a limb for there. They're losing out on a big part of the market. Are they going to retract that or start increasing that to maybe 75, 80% loan to value? But as it stands, 60% is all you're going to get from Santander if you have got self-employed income.
That's a big chunk as well. It's a big chunk to put down. 40% deposit is a big chunk. Interesting. Okay, fine. Now, we want to talk quickly about the stamp duty. Now, obviously, at the moment, it's not being extended past 31st of March. They are going to debate this in Parliament because they had a petition signed that had over 120,000 signatures. So they are going live at 4:30 on Monday, the 1st of Feb. You can watch it, stream it to see if it does get extended or not. Let's see what happens. Now, if obviously we're assuming it's not going to get extended. If it does, what do you think is going to happen? Obviously, I think there's going to be a lot more properties going to come on the market because there's a lot of people sitting on the fence at the moment that I've personally been speaking to that I've been out to value, and they're undecided whether they're going to move or not. And if it does get extended, it's going to roll until the end of September. So for the mortgage market, obviously, there's going to be a lot more products coming out. What do you think that's going to happen? And do you think that's going to be a positive step in the right direction?
Yeah, absolutely. If they extend it, I think it's going to really keep the market stimulated. It's going to keep this flow going. I think if it does stop, we might see things slowing down very, very shortly because if it stays as it is, if you haven't secured a purchase now and started the process, very slim chance you're actually going to get it through by the end of March. So anytime now into February, I think I don't want it to happen, but it's a little concerned things will slow down. So I think for that reason, definitely if they do extend it, we're all going to see things carry on, hopefully similar to how they have been. Product-wise, I think the banks are doing what they can in today's climate. No matter what you say, if the stamp duty holiday is extended, it's still almost an artificial sort of stimulus. It's not always going to be there. 100%. So there might be some point where it stops, which the banks might worry about. But so I don't see it having an impact on rates. I don't think that's just going to mean that rates come crashing down at all. I think we'll stay as we are. On the flip side of that, Sanjay, if it doesn't happen, like I say, we've still got those first-time buyers. Let's hope they're coming back this year to help the market stay alive.
100%, and I'm massively pushing for. I'm rooting for them. I'm massively pushing for that market because without that market, the first-time buyers, it just affects. It has a ripple effect on, the whole 2, 3, 4, 500,000 pound market. The only thing I've got about the stamp duty, if it does get extended, the government's going to be in a lot of debt for another period of time. And I'm just thinking, how is that going to affect lenders? Will that affect them at all? Will they be like, no, let's just keep lending, keep lending, keep lending? I mean, we've got to pay it back at some point. So that's my only. I'm playing devil's advocate here, but that's my only sort of worry about that.
Yeah, I think the banks lending. I think the banks want to lend at the moment. I agree, the government's got a lot of debt there, but the banks want to lend money. They want to write business, and with the interest rates as high as they are in those higher loan to value brackets, whilst the Bank of England base rate stays low, they must be making some money there. Now, don't get me wrong, if the Bank of England base rate does increase, then that's going to change. The increase in these interest rates, the reason they're high, I think is because they're worried about the property market maybe seeing a small slump. So house prices coming down. So if you've got a 10% deposit and the house price comes down, at some point, if it falls too far, the house value will be less than what the bank owes. Sorry, what that person owes to the bank.
Yeah.
So, if a repossession happened, the bank's in trouble. So that's why it's a risk for the bank. That's why the rates are high. So I don't really think, personally, I don't really think there's going to be too much concern about the lending itself. Yes, the country's got a lot of debt, but I think that's a drip in the ocean compared to what they've been dishing out for furlough and goodness knows what else.
Yeah, true. Yeah. Okay, cool. All right, no, good. Right, I've got a couple of questions from the general public. This one's from Gemma. If I'm looking to rent out my current property and purchase another one with a partner, so assuming she owns the current property herself, will having an existing mortgage affect the mortgage I'll be applying for with my partner?
So if you're going to rent your existing property, providing you can evidence that the rent is in some situations just enough to cover the mortgage payment, other banks might want it to be a little bit more. Maybe the rent has to be 150 times the mortgage payment. So if you've got a payment of £1,000 a month, the rent would need to be 1,500. But providing the bank can see that property's washing its face or meets their calculations, that shouldn't interfere with the ability to get a mortgage on the new property moving forward. So you should be able to then go off and use all of your income and get, the size mortgage you deserve on the property you're buying. Obviously, you're not selling the property in the background, so you're not going to have the equity out of that. You might not, unless you've got some really good savings, have as big a deposit, so you'd be up at high loan to values. 90% loan to value with a property in the background is going to be very, very tricky to obtain. And you've also got the higher rate of stamp duty to contend with. So you've got that in the background. You're going to pay the extra 3% on the property that you end up buying. So it's plausible, but there's a lot to talk about with a mortgage broker. Very complicated.
Absolutely. Okay, cool. Thank you for that. I've got a message from Jackie who said, I've got an adverse credit history. I've had a CCJ in the past. Will I still be able to get a mortgage?
So it is in individual situations. As a rule of thumb, if your adverse is more than 6 years ago, it falls off the credit file and it might not affect you as badly. So if it's historic, there's a really good chance that we'll find you something. If the CCJ is more recent, within 6 years, and if it has not been paid back, if it's not been settled, then you could be in trouble. If it was settled, if it was 5 or 6 years ago, there's some chances. If it was probably more than 3 years ago, I think we could find some lenders, maybe not high street lenders, but some lenders to consider it. But I think realistically, the more recent it is, the more trouble you're going to have. If it's outstanding and not cleared or settled, you're going to have quite a lot of difficulty. So it depends on that person's individual circumstance.
So if it's cleared and then for like the last 12 months has been cleared, will that be okay? Will lenders be like, okay, that's fine? Or will they be like, oh, it's not enough time in between it being cleared to getting a mortgage?
Yeah, if you got that, say, I don't know, let's say if you got a CCJ in March 2020, whether it's settled or not, that is very recent. It's within 12 months. You're unlikely to be offered a mortgage.
Okay.
From my knowledge, you'll probably find a bank that might entertain it after a couple of years once it's repaid, but you're not going to be talking about high street lenders. You're going to be talking about adverse lenders who will charge a lot for their services and have limits on the loan to values as well. Once it becomes 3, 4, 5 years old, you probably are going to find it easier to find lenders to help. But the key is it does have to be repaid, really.
Okay, cool. Right. Okay. I've got another question from, they didn't want it to be unknown, but it says here, I've got 4 credit cards out. 3 of them are maxed out. One of them's paid off. I have been up to date with payments. Would I still be able to apply for a mortgage?
Absolutely. But be careful which bank you approach. So there's some banks that would be happy with that, providing your income is enough to get you the size mortgage you want whilst those credit cards continue to be serviced. So the banks are going to do an affordability check. They're going to look at how much you earn, what money you've got coming in, and what commitments you've got going out. So if those credit cards have got to be paid every month, they're going to take those as a commitment. They'll work out how much they think that will cost you each month. And they'll say, okay, you're going to be left with this much money at the end of it. And that's how much we're going to base your mortgage on. So, you know, they will deem whatever size mortgage they give you on that surplus cash at the end of the month. Now, sometimes banks do check on their credit searches how much credit you've got and how much you're utilizing that credit. So if you are maxed out on your cards, there are certain banks that will affect the credit score. You won't score as well, and you have to meet a certain credit score to get through their decision in principle. But, you know, our knowledge of the market, we would know which banks are more flexible with that situation. So I wouldn't say you won't get a mortgage. I think you will, providing you're up to date on the payments and providing the affordability is still there. But there certainly are banks that would decline you because you are maxed out. We just need to know which one to go to.
Yeah, I think this is so important to speak to an independent broker as well, because if you're going to go to one bank, that might be their only, they've got their own restrictions and their own limits, right?
Absolutely.
But at least, you know, going to an independent broker, whether you go to Dave or whoever, you've got full access to the whole market of products, which is so important.
Yeah, absolutely. You come out so disheartened. You could go into a bank. I'm not saying it's this particular lender. Let's say you go into Santander and they say no to you because of those credit cards. You come out thinking, rubbish, I can't get a mortgage. House hunting stops there. That might not be the case. You know, come and talk to someone like us and we'd say, yeah, don't worry about that. That is just not down Santander Street. But X, Y, Z will be able to help you out. Let's give it a go.
Yeah, absolutely. Now, I've had a lot of people or conversations saying they're doing online house price mortgage calculators. Googling how much can I borrow up to, what mortgage can I get, and seeing a price calculator on Nationwide, for example. What do you think of those? What's your opinion?
I think that's misleading. I think people interpret their incomes differently to how the banks would interpret your income, for a start. So to begin with, if you have anything except for basic, if you're employed, basic income is the only thing really at the moment banks will use 100% of, and anything else like car allowance, okay. But if you've got overtime, commission, bonus, certain banks aren't even using it. Others will probably give you 50, 60% of it at best. Whereas you might be putting into this online calculator, last year I earned £50,000. Well, actually, you had 25% back, sort of 25 grand basic and 25 grand overtime. Somebody like Halifax at the moment will only use 30% of that overtime. So if you bundle it all into the calculator as your total income, you're going to get a completely different figure to what the banks will actually lend.
Yeah.
And on the flip side to that, Sanjay, so many people have got it in their head still, and probably from when they talk to the parents and things, 25-year mortgage term, that's what I want. They don't realise that if you extend that term, you might be offered a bigger mortgage. So literally this week I was talking to somebody who said, I was recommending HSBC. They said, but I've got a decision in principle for HSBC for 190,000. And I was saying they could do it for 250. And it's because they'd tried to get that decision with a 25-year term, when I was saying, well, if you extend to 35 years, you can get this much more money. So they don't know the tweaks and the quirks of the systems to get an accurate result. So it could be you're being offered too much money. Go and look at houses that are outside your budget and be disappointed when you realise you can't get that. Or the other way around, you start looking for things, or you get disheartened and think, oh, I can't afford anything, when actually you could. So they're good to get a starting point, but you have to talk to somebody that knows the systems better before you start house hunting, really.
100%. You made a very, very valid point there about extending a term and being able to borrow more. I mean, this is simple things, right? You're about to purchase. If you're a buyer out there looking at the moment and you're listening to this, you're about to go and purchase the biggest value or your biggest expenditure you're going to have in your lifetime, or the first property anyway. So it's so important to get the finances critically right based on your personal situation. Absolutely, like 100%. So first thing I did when I was looking last year, I called you up and I was like, Dave, this is my situation. How much can I borrow? This is the property I've looked at online. Give me some figures. Can we make this work, basically? And it was a bit complicated, wasn't it? But we made it work. And that was the point of you just being there to be like, yeah, no to that lender, yes to that lender. Yeah. Actually, that lender's probably better for you, etc., etc. So I mean, that really helped.
For your situation, there was plenty that wouldn't have helped you, but we got one that, you are where you are now.
Exactly, 100%, 100%. All right, Dave. Well, look, anything else you wanna drop in or finish off on?
For me, no. It's going to be an interesting couple of months, I think, to see what happens next. Fingers crossed we do get some form of extension on the stamp duty, and we all stay relatively busy. But it's been good chatting to you.
No, absolutely. And there's lots of nuggets of information from Uncle Dave there. He's just dropped into this conversation. So if you are listening to this and you know someone that might be looking or seeking a house, then please do forward them this video. I think it'd be very, very helpful to them. So currently what's happening in the market right now, we're trying to be active and be fingers on the pulse, so to speak. Absolutely.
At the moment, Sanjay. So definitely anyone that's thinking about it, get in touch. And like I said the other day, during the pandemic, we are offering to waive our fees as well. So all the brokerage fees to try and help out people during this pandemic. We're trying to do what we can free of charge. So do get in touch. It won't cost anyone anything.
But there you go. It's a double win right there. One more thing I've got, actually, my friend actually messaged this the other day and I've just remembered. They were looking at a 300 grand property. The parents were going to basically fund it for their son. And they wanted to get a small mortgage out. When I say small, 300 grand property, probably around about 40 to 50 grand on a mortgage. Now, is that worth doing, or are you better off going out and to get a loan, for example, or do you just get a small mortgage?
Get the small mortgage, no problem there. Excuse me, because the loan to value in that situation would be really good. you would probably get a 2-year fixed at, I don't know, 1.2, 1.3%, something like that. That'd be a feed product. You might want to pay something higher and have no fee. But either way, your payments are going to be very, very low. If you get a personal loan, you're going to be paying a lot of interest. Yes, it'll be over a shorter period of time. You'll pay it back quicker, so the total interest is less. But you could find a way of probably saving some money whilst you keep your mortgage payments low. And maybe even if you can save a good amount of money, pay that back after 5 or 10 years. You don't have to have it hanging over your head if it's a small mortgage. For me, there's no cheaper borrowing out there than getting a mortgage. So it's there if you need it. It's not a bad idea at all.
Amazing. Yeah, good shout. Like it. All right, Dave, thank you so much for jumping on. This is our January mortgage update with myself, Sanjay Patel, one of the Avocado property partners, and Uncle Dave, David Howarth at AFP Wokingham. Great guy, great setup. He's done many mortgages for me, and I'll keep obviously referring you as my personal mortgage advisor. So thank you for
Thanks,
that.
Sanjay.
All right, guys, thank you so much. We'll speak to you soon.
Cheers.
Cheers, Dave.